Good evening, guys. Welcome back to another daily market review. I will never be able to say it outright for some reason. Anyways, so today was a massive day. Apparently, it was trending Monday, um, and the price action was pretty clean, I would say. But anyways, um, here's what happened basically today intraday. So this is a Nasdaq 50-minute chart, and this is what I had before New York opened today. This is 9:15 candle. So the candle after this is 9:30 New York open. So here, the first thing is what struck me was the highs here, which was a bearish S&T divergence on the 50-minute time frame. Now, because it's on the 15-minute, I was scanning the lows to find a bullish S&T divergence, basically, to get a framework. So when I scan the lows here all the way down to this low, I've noticed this is a bullish S&T divergence on the 15 minutes, right there. So this helped me to find my main framework for the New York Open and the New York session afterwards. So here's the daily range equilibrium. This is, I'm going to draw it in time so we can all take a look at it on the 1 minute. This is the sell side. This is the buy side. Now, because there's an S&T divergence at the highs, market broke down a fair value gap, and in that fair value gap, it formed. I think this is another, yeah. So here, it's another short-term S&T divergence within a fair value gap, so it should deliver more. So what's the objective of that sell side here? It's to take the short-term sell side at least, and then reprice the market into range equilibrium for a healthy run, right? So that was the main point for a judo swing, basically. This is the sell side, and then when I look at the range equilibrium, what I see here is, now as we mentioned this as well, a discount fair value gap, and there's an order block here also, could be a bounce from there as well. So this was the main framework. I was expecting a judo swing, right? Range EQ, then buy model. If it didn't come down to range EQ and try to rally, that would have been a fake rally, basically. So, anyways, let's go down. So let me turn off the replay mode, and let's go down to the 1 minute time frame on both assets. So here's the New York Open. First things first. Here's the New York Open. 9:30 candle. That 9:30 candle is doing one thing. Okay, it has one job. So here, it's just doing further damage. That's why it happened to be a turtle soup. So here, 9:30 on ES, somewhere here. So before market opened, we actually had a bullish divergence at the lows. Okay, Nasdaq made equals. Actually, that's a lower low, and ES made here a higher low. Okay, and then we have another divergence here. This is a 1 minute time frame right here. What this means is we have a short-term daily range as well, from the bullish divergence to bearish divergence, basically. And if it wants to go to sell side, what it's going to do is it's going to retest basically the premium. And what's there? There is an old swing high, which means it is likely to turtle soup that high to go down towards sell side to 15 minutes sell side objective. Okay, so that's what happened there. Went down to the sell side, but it did not touch the range EQ here. Okay, that's important. Never touched the range EQ, so it had to deliver one more time. Came all the way down to this kind of fair value and the range equilibrium, and then price basically stalled. Okay, now I have my interest going long this price action. Now the buy side is 15-minute SMT divergence. You can also target the 1 minute divergence as well. That this would be the 1 minute buy model basically, and a 2022 model ICT model. Sell side is taken out one more time, and buy model. So, anyways, let's take a look at what happened here. Price initially accumulated here, formed a break order block. A down close candle at 9:49 is an order block here. This is the OB. Actually, let me annotate that with a rectangle because I want you guys to see the mean threshold of it. It's basically the bullish OB. As you can see, after it formed, it never even came down to the main threshold. It was just basically the upper 25% of the order block was respected. Then we got a V shape reversal, and in that V shape, there's a breaker block and a fair value gap right there, unicorn. Um, it was respected. It delivered sell side, and up here, even though it failed, there's no divergence. Okay, there's no divergence, and because of that, this sell side delivery is a fake delivery. Okay, it's a fake move, fake rally. Now, what you can do is, I know there's no SMT divergence here or here, but you can take a look at that dealing range. Although there's no divergence, what it gives is it gives a couple things. First, it gives a discount fair value gap here, okay, and then a discount chart fair value gap, which is the same level. Really, you can use either or. I'm gonna take the discount fair value gap. This is a long, and the target is this is the second leg basically, short-term buy side and the 1 minute buy side. My model objective. So it delivers both pretty accurately. It goes for the buy side. This is another SMT divergence at the lows, and goes for the buy side. Both of them got that. Now afterwards, because this is let me go on the 15. Oh. It's basically original consolidation. We traded above. Now it's consolidating again. This consolidation will lead to two things. It could lead to two things. One, it's going to be either continuation, expansion, or it's going to be a reversal, right? So what happened there was this constant consolidation. Up until the consolidation, there was no bearish S&P divergence, by the way. Okay, but in that consolidation, it actually diverged one time, right about here, and this divergence is not a 1 minute divergence, but a 5 minute divergence. 5 minute bearish S&P divergence. Now, why I'm mentioning 5 minute is once you see it's on the 5, just pull up the 5 minute chart and look at the short-term sell side on that time frame. Now, the reason for that is because this divergence on the 5, its objective is to take out the short-term sell side on that time frame. Okay, so let me quickly pull up the 5 minute chart. Here's the divergence, and the short-term sell side is right here. You see how it rated that? That's the turtle soup. 5 minute short-term sell side. Now the bearish SMT divergence completed its objective. Let's go back down to 1. And that sell side delivery, it was actually a new bullish divergence. As you can see, yes, left equals, that's a bullish divergence. So we have a bullish divergence here, and market sends it higher. The first target being the SMT highs, basically. Send it higher along the way. Let's take a look at the highs. Whether ever it formed a bullish SMT or bearish SMT divergence at the highs or not. Let's see here. There is one. I think that's not, yeah. Okay, here there is one. Let's see what happened here. So Along the way, it formed a bullish divergence in this leg. Now it formed a short-term dealing range on the 1 minute basis. As long as it holds this dealing range EQ, it's going to be seeking buy side delivery. Okay, as you can see, it never broke the range. It never even came down actually. Here ES did and rallied. So let me delete this. I'm going to keep the lows for now. Reading the highs again, so it's expanding. Here at the highs, it formed another divert. I think, yeah, I can call that a divergence. Here, did the same thing literally. Formed a divergence, tried to rally the sell side, but that sell side delivery became another S&T divergence here. Okay, and it sends higher. So it basically fails to just even to suit the lows. Okay, so that indicates bullishness. Goes for the buy side, keeps going, keeps going, keeps going, and at 20k, which is a mental level here, I'll even say 20k mental level, it reacts very sharply. Okay, very very sharply, and respects bearish order flow. So here's the first fair value gap. Here's the second fair value gap, and because it's respecting, you can take that as a range high basically. Now the only SMT divergence, the last SMT divergence is right here. I'm gonna get rid of ES for now because this is an important part. So it's the first divergence, and this is a sharp reversal, basically V shape. So the dealing range would be from that high to SMT low. Now it broke down, as you can see, it accumulated within this fair value gap, but it never came down into range EQ. Never. Okay, it formed a divergence here at these lows, but that sent price higher eventually, but it never touched the range EQ. That being said, the price rally that's not coming from range equilibrium, okay, is always a fake rally. So here, this rally, that's why I annotate this as a fake rally. You basically either sit through it, you disregard the bullish PD areas like fair value gaps and stuff, or you basically wait for a short opportunity as it moves higher, because again, it's not coming from range EQ, meaning the external high will not get tagged. Okay, it'll do something like this. Let me do it this way. Tries to go, it will fail at some point. It will come down to range EQ and form a buy model, or it'll go down to range EQ, break the range EQ, and goes for the sell side. Okay, two things. And here, let's get rid of this. We have what? We have a buy side here and a sell side right about the S&T lows. So within the fake rally, what happened was, I mean, the bullish S&T delivered, but that bullish S&T's objective is never the external. It's the internal highs. Here, for example, there was bearish divergence. To take that high, market uses the lows, basically the bullish divergence at the lows. So what happened was it moved towards the extreme bearish fair value gap, came all the way up to its CE. Okay, this is what I mean. Like, this is a fake rally because it's not ripping through the old PD arrays, old bearish PD arrays. If market was bullish and was going for the highs, it would have just had more speed up here. Okay, as it trades up into the extreme bearish fair value gap. But the reason for that is the range EQ. It's not coming from the range EQ. So the CE got rejected, came down, bullish fair value gap reaction. Tried several times here. Tried like once, second time, third, and fourth time, and that actually formed a bearish 1 minute divergence. That divergence caused a displacement. This is a premium displacement. This is an OT model also, which I don't use. Premium parabolic gap, and sends it down into range EQ. And that range EQ got displaced lower, you gapped it down actually, retrace into range EQ, and kept going towards sell side. So tomorrow, or on today, in about like 30 minutes or so, once the market opens, I think what we're going to be watching is delivery towards there, that sell side here. Come on. After that, I don't know what's going to happen. But yeah, pretty good EOD delivery. But the key takeaway and the most important thing about this price action is to understand, you have to understand why this is a fake rally. Okay, that is the most important part. So if you guys ever have a question about this after watching this video, please do ask me, because I want you to, and I need you to understand why that's a fake rally, and as it moves higher, why you should be looking for short opportunities. Okay. So, hope you guys find this insightful. I really don't know what's going to happen tomorrow, so I'm not going to speak or say or predict anything as of now. I'll look at the price action tomorrow in the morning, overnight price action, along with overnight price action, and I'll see you guys tomorrow in the morning. Have a great night.